Hello? Sorry, I had to restart this shit a couple times because the resolution apparently was not up to par to YouTube standards, even though it's what I've been using the past couple days. Alright, so let me double check on my phone and make sure this shit is legit. This one, bro. Fuck. My god, this shit's so annoying. Alright. Wow. Um, Streaming double monitors is annoying. Especially because, I mean, I'm checking on my phone here, the quality ain't that great. All right, yeah, I understand the inconvenience that first of all the screen is small and the quality is not as good as it could be. But um but I don't know what to do. I don't know what to fucking do. So I've been looking for solutions last night, but I had to study for a test that I have today that I did not study for actually. So but yeah. All right, so Johnny has zones for us. Let me see what he has. He has 115. Where's 115? Oh, is that it? Okay, that's right above weekly view up. 115 to 027. Oh, that's a massive zone, man. 115 to 027, that's a huge zone. That's a huge zone. 115 to 027. It's really big. Let me Okay. Right. Well, anyways, let's get on with the pre-market. So last night I streamed a Monday night analysis of today's price action, and I had two zones marked out. One was down here, and the other one is up here, which it seems like it's getting respected. We're consolidating here. We're not shooting straight up or down. We're consolidating here. It looks like we're breaking out of this zone. If we close above this zone, um, might be a good area for long. The only problem is today. Look, we had non-farm. So let me see. Where was the non-farm? Here. Oh, yeah, non-farm. Oh shit, you turn non-farm came in pretty bad for the dollar, so it's the reason why we're up right now. It's at 8,088. All right, but like I was gonna say, we have multiple news events today. Right, we have the the Canadian rate statement. I'm just kidding. Canada doesn't fucking matter. We have this guy's testifying again for some fucking reason. I don't know why he's opening his mouth again. And then we have Jolts at 10. And then if you're into crude, you got crude at 10:30. And yeah, that's it. So this morning we had non-farm payroll, NFP, or non-farm employment. I mean, not NFP, non-farm employment. And we have this old hag is opening his mouth again, and we got jolts right at the same time. So jolts is not gonna matter. As long as this guy is opening his fucking pie hole, jolts, or any news event for that matter, does not matter. None of it matters. So what we're gonna do is we're gonna mark out our zones. If we get there to, if we get there pre-market, I mean, if we get there before 10, before this guy starts speaking, we will probably take something, depending on how the footprint is. But more than likely, we're just gonna be chopping up until 10, and then at that point, I'm gonna put on the stream. I think Financial Juice is gonna have that up. I'm gonna have that on stream, and then yep, gonna have it right here. So we're gonna have that on stream, and then we'll trade based on what this guy says, what he doesn't say. The problem is that whenever you have Powell speaking, whether it's testimony or FOMC minutes or whatever it is, the price action is always very, very choppy. It's very up down by like 50, 60 points. That's not the type of action you want to get stuck in. That's, unless you're a scalper, but we don't really scalp here unless we have to. But anyways, let's get on with pre-market. We got 3 o'clock right here. Check that out. Let's check out the 3 o'clock. Yeah, it's this one. 3 o'clock. Yep. Alright, so we got unfinished auction right here. Imbalance, imbalance, point of control, point of control. Another imbalance here as well. Another imbalance as well. Okay. Multiple. So we got a lot of imbalances down at this zone. A lot of imbalances. So, all right. So we got tons of imbalances ranging in this, just in this little zone right here where this wick is. So that tells us that this was an area of resistance. Well, I mean, it was an area of resistance. This was previous resistance. Buyers had to put in a lot of effort to break through. They're gonna defend that position. Now we're gonna mark that out. Just let me look to see anything else. No. Nothing else. Alright. Let's mark that out. I think I had too much coffee, bro. Put it right here. This. I'll move it over. Just because we've already hit that zone. We didn't reject it. In fact, we're pushing through it, so. Alright. That zone marked out. Let me move this a little bit lower. Let's take a look at the ATR as well. Alright. Yeah, the ATR is pretty high. Yesterday it was at 240, now it's at 280. Put the MES as well. MES is 51. Yeah, that's pretty volatile for ES. That's pretty volatile for ES. Okay. Take a look at this 4 o'clock candle. It's got something here. Yeah, I mean, that might be worth taking a look. Down here we have some imbalances, but really buyers won't be defending until they get down to this area right here, this zone. Okay. Gonna place that there as well. So right here we have a wick test. I'm gonna make this blue, however. Make that a B plus zone. Yeah. Got point of control, got an imbalance. Yeah, it's not something, it's not really, it's not that strong, but might be something worth taking a look later. It's also bottomed out this range as well. Yeah, it's hot as fuck in here. Yeah, I think I drank too much fucking coffee, bro. Too much fucking coffee. Let's put some music up in this bitch. I am just so fucked right now, dude. Alright. Alright, let's focus up. Yeah, 10 o'clock here. Let me see. Got anything interesting? That's 11. It's 10. 11. This is the zone that we had marked out. We just blew right through it. Blew through those imbalances and had a bunch of imbalances here. Blew through that. Let's check out the daily. So here's the thing with the daily. We've been in a very, very bullish market lately, which is why that down move yesterday, I didn't trust that down move a lot. Although we made some pretty good money from it, we got some good trades from that down move. We were waiting for that down move for a while, man. Let me tell you, I don't trust it because the market has been extremely bullish lately. And not only that, but it rejected the low of 822. It came just shy of hitting that low of 822 and rejecting. Now we opened up well above that, so that was not 90% sure that was just a pullback, especially with how retarded this market's been lately. Powell speaking today is going to be a catalyst. It's going to be something that confirms whether or not we break 822 and we continue the down move, or we break all-time highs and we continue the bull market, right? So it all depends on what he says. We already know that we're going to get less than 2 rate cuts this year just by how the news lately, like the economic news has been lately. Bulls don't really consider the rate cuts. I mean, because like if you take, we looked at this Monday night, we looked at this not Monday night, yeah, last night. Wait, yesterday was Tuesday, right? Fuck yeah, Tuesday night analysis. No, was it Monday? Fuck, I don't remember. But if you look here, Fed Watch tool, current rates are 25 to 50. And you know, a lot of people, so March and May are off the table. June I think is also off the table. This is going to change very quickly. You're going to get a lot less people betting on a rate cut in June, maybe even July too. We might not even get one in July, maybe September and December. I mean, let's see. The problem is that if the Fed cuts rates too prematurely, we're going to get really fucked. We're going to get really fucked. This is a similar situation that happened in the 70s, where the Fed at that time cut rates too early. Inflation grew out of control, too higher than it was before, and then they had to restart the whole cycle all over again. And then it was a whole decade of just, you know, raising rates, decreasing rates, inflation getting out of control, and then starting that cycle all over again. So the Fed does not want to, Powell does not want that to happen, which his concerns are valid, but the way that he's handling some of this, I don't know. He should be very hawkish just to be on the safe side, man. Because I mean, think about it. If he does cut rates early and we get fucked over, and then inflation goes out of control, and then we gotta restart the cycle, we're gonna be in this shit forever, right? And it's gonna be worse in the long run. So I know that he wants to take his time and make sure that things are going well. Make sure that he makes the right move and the safe move, right? Especially when you have millions of Americans depending on this type of decision. Even if they don't watch the news or if they don't know what the Fed is doing, these interest rates are affecting everybody. And you see it in your day-to-day lives. Also, it doesn't help the fact that Joe Biden is also fucking over our economy more than ever, but you know, it's a topic for another day. So yeah, same thing with ES. We rejected that low of 58, came just shy of hitting that low of 58. So yeah, that was just a pullback. We're gonna be long bias. Well, I don't want to hold a bias, but we're gonna be looking more longs than shorts. And the way I see it right now, there's not a whole ton of short opportunities that we can get. Johnny said 115 to the 027, but that's a huge sell. Thing is, let me see. Yeah, I'll subscribe to that idea. Alright, I think we got our zones. We got our zones. All we gotta do now is here, silver. This over here. Zone. We get a retest of that zone. We'll look for longs. That's about, let me see, 38, 18. It's a 20-point zone. Yeah, we can work with that. Just gotta be tight on the entry. Alright, let me write this down. So we got 832. We're not touching 832, but you know, just in case. To 857, 857, swing low, plus. 966 to 983. 983 buy support. Make that A plus. And then we got this little wick test right here. That's 018 to 38, right? Yeah. So 018 to 038. That's just gonna be a wick test B plus zone. Let's check this out. I think we've already gone through the hourly footprint. Yeah, we've gone through the hourly already. See, okay, all right. Let's get down to the execution chart. Pull up the hourly next to it. All right. So first, let's start at the bottom. We got 832, 857. So, excuse me, 832, 857. That's gonna be, excuse me, swing low. That's the S plus zone. Shit, what's wrong? After that, we got 966. Got 966 to 983. 983. This is going to be, that's just yeah, buyer support. It's A plus. Not too crazy. If we get out and swing low, yeah, we either long 20 contracts or we short 20 on the break of that. This right here is gonna remove that. Purpose of today, and then the last zone is 18 to 38. Yeah, 018. Yeah, yeah. Okay, that's below us. Yeah, 018. Yeah, that zone that we deleted was something that already got broken through on the hourly. 038. It's also fuck, motherfucker. Let me lock it. What a coincidence. This zone right here is not only just the previous low. It's also got VWAP, 200 moving average. Got the 20. Well, I like we use the moving averages a lot, anyways. But the 200 moving average is one of the few moving averages that actually does something. So, okay. All right, we got our 3 zones, pretty tight. Go on ES. ES is going to be the same story, more or less. ES lately has been looking very volatile, like more so than the NQ, which is crazy for me to say. Well, it looks like we just broke clean through that zone right there on the break. Oh, and actually, you know what? Before I forget, I need to put this here as well. This is 38. To 18. Okay, and then we got 960. Yeah, about 983. 966. So it's the same as before, but we're gonna highlight that as gold. Lock that down as well. After that, we got 832 to 857. Right? Yeah. Wait. Yeah. Yeah, 9. Okay, yeah. 857. All the way down here. 857 to 832. It's the low of the day as well. Alright, perfect. Get that shit under control. Remove this. I don't use myself. Alright, ES. Let's do this quick. We got like 15 minutes, about 15 minutes. Honestly, ES doesn't really look that good. What, I got 3 o'clock down there? Yeah, I mean, ES ain't looking that hot. See this, 9 o'clock? I think we'll just skip it on ES for now. So it's not looking ES is not looking that great. The thing is, the ES is not offering us a lot of opportunity, and I don't like that because volatility is going to be high today, and I want to trade something that's already naturally less volatile. But I guess we'll just keep on doing NQ with less size. Instead of doing 2 contracts, we're doing 1 or 10 because we're doing micros. All right. This is weekly VWAP. That is session VWAP, isn't it? Or is that also weekly VWAP? This should be updating every tick. Yeah, that's order flow VWAP the week on every tick. Yeah, that's, I don't know why. Oh, probably this VWAP is wrong, I think. No, this is... Fuck, shit, I don't know. Whatever. That's not the VWAP that we use anyways. We use the one on the 5 minute. Oh, that's fucking stupid. That's ES, bro. What the fuck? My bad. That's ES. I mean, it's retarded right now. Okay. That's why I thought. It's 028, 029. Yeah, 029 exactly on the dot. So let's go here. Dash. One. Is it a 40 point? Okay. Yes, NQ. Alright, yeah, we're trading NQ today. Let's go over to, where's that at? Right here? It's about 822. Let me investigate. You hear? That's weird. Chat. Why the fuck not? My god, YouTube. What the fuck? Yeah, this is working. That's weird. Hmm. It's weird. Why doesn't let some people type on my stuff? Maybe. Works. Yeah, it works. That's actually weird. All right. I mean, I feel like I should be getting some zone up here in the off chance that we do make a move down. It just doesn't look like it. Doesn't look like it. I want to look for that zone down here that we got. It's 18 to 38. Yeah. Look for that. And we get there. Take a look at what's happening with Delta. Might be a good opportunity for a long. So I have a midterm today, bro. Yeah, and our stream yesterday, when we were done with it, it was blocked from having the recording on my channel because we were playing some copyrighted music. We were playing a bunch of copyrighted shit. Actually, we were playing National Geographic. We were playing Journey, Bon Jovi. We were playing a bunch of 70s and 80s music like Black Sabbath and whatnot, and obviously 80s and 70s music is heavily protected, like heavily. If you guys ever try to like post a cover of Hotel California, it's almost impossible. It's almost impossible, and you can barely find one that stays up for more than a month. Almost impossible. There's a story behind that, but I don't really remember off the top of my head. It's at 150. What? Wait, 18 150? Hmm. I don't really use fibs. Let me see. I don't even know how to fucking use a fib, bro. Oh my god. I'm sure ES has plenty of opportunities for other strategies, other types of zones, whatever, but for me, nothing there. Nothing interesting. Yeah, nothing interesting. Yeah. So it's 16 on ES. Yeah, but that's swing low. We have that already. So. I have 5 minutes left. 5 minutes. We get an opening dump, fake out. Be nice. Be very nice. Right into our zone as well. Let's see. Let's wait a couple minutes more. It's cold inside my room. It's very cold. Go 115. 115. VIX is at 14.3, right? Yeah, VIX is pretty low as well. If we don't get into our zone, we're just gonna wait for news. We're gonna wait for Powell to speak. But that's gonna be, man, that's gonna be so violent. Trading that. Oh, what's up, Snigger? It doesn't even show you as a viewer. He's shadow viewing. We're gonna be waiting for an opening dump into our zone. If it happens, take a long. If it does not happen, we don't do anything. Yeah, dude, the stream this morning was giving me a lot of problems. I had to restart it 3 different times. I had to restart it 3 different times. It was weird. Yeah, the streaming thing is a pain in the ass. It's one more thing to worry about. Alright, we're opening up in 20 seconds here. 15 seconds. Big ascending wedge to break down and open. We'll see, man. I don't have any of those wedges on my chart. I don't know how to draw that, to be honest. Yeah, let's see. Let's see what happens here. Either way, I really don't. Oh, look. It's that. This is weekly VWAP is that gold line. So, let's see how that reacts. Yields are down. Bonds are up. So, oh, that. If this was not, you know, this classifies as classic absorption, but since it's like the first 5 minutes, I don't trust anything the first 5 minutes. Nothing at all. I trust nothing the first 5 minutes. Will not touch this until we get into our first wick test zone. Yep, especially NQ. NQ is already volatile. You take a look at this ATR. 280. Yesterday was at 240. Today's at 280. And yesterday we got a wild move. So today is gonna be fucking crazy. But the VIX is pretty low. The VIX is not as high as it was yesterday. But the VIX also has been. The VIX also has not been reliable. Like bonds and yields has not been super reliable lately. My game plan is I'm gonna take a long at this wick test. Stop below it. If you get stopped out, I'm just gonna wait for Powell at 10. And then kind of trade based off of what Powell says. And if nothing happens till then, whatever, I'll just take a nap. But yeah, that's so weird. The goal is hit the wick test B+, and we're gonna have to make this a preemptive launch. We're not gonna be able to wait for delta to form and all of that, because the way that this is acting right now, I can already tell it's gonna get down to the zone and then boom, wick straight out of it. So we're not gonna have a lot of time to wait for confirmation. Which that's one thing I don't like about the NQ, is that you have to be so preemptive on a lot of things, because it'll just grab your zone and leave you. So I like trading ES more, but the ES, I cannot identify any good opportunities this morning on the ES. I mean, what? That's 07. Let me see that shit. Yeah, that's like, yeah. That's a good zone, but the thing is, that was already broken through, so it's kind of invalidated. Yeah, I couldn't find anything good on the ES this morning, which sucks. Let's... You see this bar? This 1200 delta, and we got a bunch of sellers with this volume sequencing, this purple volume sequencing here. They just ate up those buyers. When you see a bar with a 1200 or 1000, at least 1000 delta, that should be a pretty big bar in the proper direction. So if it's a positive delta, you should be seeing a big Bollinger candle. If it's negative a delta, you should see the opposite. I mean, if it's negative 1,000 delta, you should be seeing the opposite. Here we got absorbed. Well, buyers got absorbed. So, looks like sellers want to take this down. Let's see. But remember, on the next 5-minute candle, this could easily just go right back up and retest and stop out anyone that's shorting right here at the bottom of the hole. That's why I don't like doing momentum plays where people short the breakout. That's very dangerous because, especially at NQ likes to retrace the candle a lot and then continue the move. And that stops out a lot of people. I even have it on my spreadsheet. Like, every time I try a momentum play, I think it's like a 110% fail rate. So I do not trade momentum whatsoever. I think it's too dangerous for my style. Just pick up that. Yep. Good shit. Good shit sticker on that short. This mic is fucked up. This might continue to flush a little bit more, but I don't know, man. It's the middle of the range here. So I'm gonna play it safe and wait. So take a look at this. Yeah, exactly what I was talking about. We had a negative 700 delta on this candle, and it just shot straight back up. Sellers got absorbed. So when this happens, especially on the open, you get both sides getting absorbed. Like, for example, this candle, you had buyers with a 2,000 maximum delta get absorbed, and now you're getting sellers. The negative 700 delta, they just got shot up. If this bar closes green, we're gonna more than likely we're gonna be chopping until 10. Let's see what's going on here. Oh yeah, I see your analysis. I see your analysis. Yeah, I see it. But that's also another reason why I don't like using trend lines, because you saw that NQ wicked out of that trend line and then back down. That I could not be able, you know, that would fuck me up. I like to trade very how do you say, very uniform trading. I think when you use trend lines and stuff like that, it's very subjective. So it's not as uniform as having just straight zones that you can, like lateral, like, you know, like lateral trading. I guess it's what they call it. Oh, thank you, Snickers. Yeah, I mean, the way I see it is, it's better to have a very technical style, because if you have a lot of confidence in your move, you're not gonna hesitate. You're not gonna take profit too early or cut your loss too early. Like, you'll have more confidence behind the move. And in my eyes, trading is very akin to high stakes gambling. Let's be honest, we have to kind of embrace the gambling part of trading, but also to be a professional, to be a successful high stakes gambler, you need to be very technical and rely on data rather than superstition or anything like that. I know people personally who trade based off what tie, like what color tie Powell is using, which is, and they're legit about it. They don't even make it as a joke, and I think that's crazy. Especially with the stops. Yes, you should be technical with the stops. Your risk management is what saves you. It's the most important. So your risk management is one of the most important pillars in your trading, and it goes hand in hand with the mentality, because if you don't have a risk management, fuck dude, fucking bank is calling me again. If you don't have a risk management plan that you follow, it's going to really kill your mindset, because you're going to see the losses rack up without any of the winners to come back and alleviate the losses, and your mentality is going to suffer, and because your mentality suffers, then your decision making is going to suffer, and then if your decision making suffers, you're going to make bad trades, and then you're going to end up on days where you want to make the money back, and then you're gonna be in an endless cycle, an endless loop of just blowing accounts, losing money. That's why risk management is a cornerstone of everything. Risk management really helps you control everything. So it took me a long time to learn that though, but honestly, I did have to read a couple of books, a lot of books actually, on how to improve that mindset, but it's definitely worth it. Gambling with counting cards, yeah. That's what trading is. Trading is gambling, but you're counting cards. That's exactly what it is. Is exactly what that is. You need to have an edge. When you go to the casino and you're playing blackjack and you just play according to the rules, like you just, you know, when you're playing blackjack and you just play by the surface level rules, you don't have an edge, because the house is also playing by surface level rules, but they have an edge to the house, you know, so you're always gonna lose. And trading is the same way. If you just trade with candlesticks and price action and you don't have like a footprint chart, or you don't have delta or any other tools to give you an edge, yeah, you will lose. You will lose 100%. Best Loser Wins by Tom Hugard. Yeah, I read that book. It's very good. That, and also The Mental Game of Trading by Jared Tendler, because that book is more important, because The Mental Game of Trading gives you concrete steps and plans that you can follow with your trading that will improve your mindset. He gives you exercises to do. And in my trading journal, actually, I have a lot of graphs, and pretty much what that book does, it makes you map out your mentality. It makes, okay, for example, you have a losing day, you break it down and you say, well, why did I have that losing day? Oh, because I broke my rule. Why did I break my rule? Oh, because I was anxious. Why was I anxious? Oh, because rent is due tomorrow. Oh, so what should you do to alleviate that pressure? You know, you go down the list and you find the root source, or the root cause of everything. That's a very important book. It gives you concrete steps and plans. Best Loser Wins just gives you perspective. And perspective is great, but at the end of the day, you also need a concrete plan to deal with those emotions. And I'm still dealing with my emotions. There are some days that I tilt, but I'm only like about a year and a couple months into this, so I don't expect to be perfect. So yeah, take a look at this price action. This is exactly what I predicted. This is what I was talking about, man. When you're getting buyers and sellers get absorbed back to back, 5-minute rotations, you're gonna get a range. At 100%, you're gonna get a range, or like a chop. And if we're getting chop on a day like today, when news is at 10, yeah, right, you can just take a nap right now for like 10 minutes, 12 minutes, come back right before 10, and then trade at 10 o'clock. A year, yeah. And that's the thing, man. A lot of people have success within a year. Am I streaming JPOW? Yeah, I have JPOW right here. Should be right here on Financial Juice. It's also going to be here as well. Yeah. Yeah, he's going to be here. Let me see. Yeah, there you go. Right there. Oh, no. Not that. Yeah, it's going to be here. But, yeah, like I was saying, a lot of people, well, actually, I don't know if you want to watch my stream for JPOW, because there's a bit of delay. There's like I'm seeing on my phone right now, there's like a 5 to 6 second delay. So I'm not sure if you want to watch it on my stream. You can't. You're more than welcome to. Just give me a delay. But like I was saying, a lot of people, well, not a lot of people, there are very few people that find success within a year of trading. there are very few people that find success within a year of trading, and that just depends on how much work you put in the first year. And then contrary to that, you have a lot of people that don't find success until year 6 or year 7, which can be very disheartening. You know, but it all depends on the type of work that you put in. The average apparently is 2 years, is what everyone says. Is it takes about 2 years to become consistently profitable. Granted, you put in the required effort every day, which is reading and journaling and doing all that stuff. So some people do it less. Very few people do it in less than 2 years, but a lot of people take a long time. It just depends. I think also what it is a lot of people, because obviously you can learn trading on YouTube, but you know, YouTube and the propagation of social media and this whole flex culture thing has developed a plethora of trading gurus that don't know what they're talking about, and they sell courses because they can't make money trading, so they sell courses instead, and they teach people a lot of bullshit. And so a lot of people that want to trade for real will have they'll take a long time to filter out a lot of bullshit. It will take them a long time to filter out all of the bad information and get the good information. And at that point, it's like starting over again. So it's like they waste a year doing that. So, yeah, that's what I'm saying, man. Yeah, the Discord has improved your trading. I'm glad to hear that. Yeah, because the whole point of the Discord, it's not like a signals Discord. It's to share strategies, information with other people, and most importantly, to accept and to take that advice and implement it. You know, that is the whole goal, right? Is learning from people that actually know how to do this rather than YouTube and shit. I don't know who Patrick is. It's probably an influencer, right? I don't know who he is. The number one influencer that comes up on my mind is this Asian guy, the trading guru. I'm pulling up right now. Or the trading geek. I don't fucking know. I think he changed his name because he got exposed. No, he's still a trading geek. Yeah, no, this guy is a load of bullshit, bro. How to trade like a pro so you can get rich ASAP. That's how you know when people are marketing trading has a get rich quick scheme. That is fucking stupid. Make trading simple. Trading is not simple inherently. It's not simple. You should try to make it simple, but in the grand scheme of things, if I show this chart to a regular person, they're not gonna know what it is. If I show this chart to this guy, he's not gonna know what it is. Like, bro, like, look at the bullshit that these people teach you, you know? Yeah, this is just a load of bullshit. If I look at all of this, that's very that is so ironic. That is so ironic. Trading price action only. I've never seen a trader that makes money only on price action. That's trading blind. Patrick Leblanc got taught trading steam accounts $500 course for teach people to just buy. Yeah, this guy's the same. A lot of people are like that. I've never come across that guy. I'm glad. 7 figures at 21. Dude, this is like, it's just so much bullshit. Like, for example, market structure, prop firm challenge. I mean, this guy does breaks. Yeah, no shit. I mean, yeah, a lot of these guys teach the same shit. This guy's been exposed before. If you go to, there's one trading YouTuber that I like. His name is Iman Trading. He has exposed a lot of these people. Oh, ICT is another big one. ICT is another big one. Or, yeah, he has a video somewhere here where he exposes that Asian Fuck. Whatever. Go there and you'll find it. But yeah, it's a problem with nowadays. Oh, that guy. Let me see. I didn't even see. I think he has. Let me see. Yeah, close to a mil. 715,000. Yeah, exactly. All of his money is from YouTube. So. If you actually look, if you want to watch, there are very few trading YouTubers that I can vet for. One of them, Pickle Financial. I've heard of Pickle Financial, but back when I used to trade options, but I don't do options anymore. If you wanna find good YouTube channels to learn trading from that are legit, Axia Futures. This is an actual proprietary firm, a trading desk. Yeah, Axia Futures. You have what is this guy? I forgot his name. It's this guy, Umar Ashraf, also pretty good. You also have this guy as well. His videos are long and boring, so that's how you know that he's legit. And he doesn't have fancy thumbnails either. Those are the three guys that I would recommend watching. Plus Iman Trading, the one that I showed before. Those are the only three that I can vet for real. Alright, looks like we're breaking out of this. Broke out of this small consolidation slightly, but you know, yeah, sellers are still getting absorbed. We got a negative 1300 candle here, negative 1200 candle, still getting absorbed. So yeah, we're gonna be chopping here. And this is the crazy part, man. This is why trading the footprint is extremely important. If you just look on a candlestick chart, I mean, you'll have this range identified. You will see this breakout, and you'll think, oh shit, let me short the breakout. But then if you look at the footprint, you'll see that sellers are getting absorbed. This is not a real breakout. You have a lot of volume and sellers getting absorbed. This is not a real breakout. So that's why I'm saying, man, trading the footprint is it's overpowered. Shows you a lot of stuff. Let's see. Up bounce. We used 5 minutes and we got this fucking idiots talking. I don't know why this fucking guy has to talk today, man. Fucking kidding me. Alright, in a couple minutes, I'm going to turn off the music and turn on Financial Juice. I'm also going to take a piss. I'll be right back. check out what's going on here. Yeah, it's precisely precisely what I expected. You know, one strategy you could do is, and I've always noticed, is days where Powell is speaking, whether it's FOMC or a testimony or whatever it is, we always chop or range until the time comes. So what you could do, and I would try this on the sim account first and back test it. What you could do is fade the open candle. So whatever the open candle is, you know, obviously the opening candle is always volatile on the NQ. You just fade it. Fade it, expecting for it to come back into the range and just range the entire day. Like if we faded this candle around value area high 120, got down to the bottom of the range, that'd be way, you know, that'd be like a 40 point close to a 40 50 point trade right there. I mean, I don't know, you try it out if you want on the sim account. I might do that next time. I might check it out. All right, time to pause the music. Launch financial juice. We're getting close to our zone, actually. That wick test B plus. If we get there before top of the hour, I'll look at a long. Look at a potential long there. Yeah, I get there in 2 minutes though, before the top of the hour. I would love to see my zone get played out. ES has always been a snooze fest. Oh, the VIX is climbing a little bit. Take a look at the ATR. 280 still. Nice. A57. I think A57 might have closed. Let's see, man. I stopped being any sort of bias after I saw this fucking market take off because of Nvidia earnings.
One minute remaining now. I'll lead with the US JOLTS job openings.
I'm live streaming a YouTube live. How funny is that? Oh man, I'm an idiot. Got distracted, missed my entry. But not even, man. This looks pretty heavy. We'll refresh that, see if that's correct. Damn. Yep. Classic absorption. You got a lot of sellers on there. Fuck, bro. I didn't get distracted. Damn. You guys saw that live. Mr. Thundercock getting distracted and missing his entry in his zone. Gotta revisit down here. Or at least to the 29. 29 zone would be nice. Dude, I was...
Order filled.
Put that down here. Actually, what is that at, that's at 32? That's good enough.
Order filled.
Alright, gonna quick scout. 114. Not liking that price action. Especially since this guy is talking right now. I don't know what he's waiting for. What did jolts come in today? Came in good. So you get a better entry on that long. Be nice.
Order filled.
That's at 24. Right below there. Let's take a look at that. See if the sun plays out.
Stop filled.
And yeah, this is violent, bro. This is very violent.
Order filled.
Yeah, when that fucking thing opens like that. Check the hourly. We're about to get down to that zone. So alright, stop.
Order filled.
Let's get out.
Committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time.
Alright.
The hearing is titled The Federal Reserve's Semi-Annual Monetary Policy Report. An inventive title we use semi-annually here on the committee. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I will note at the outset that this hearing has a hard stop at 1 p.m., which will be strictly observed. I see Chairman Powell smile. It's just 3 hours. I'll now recognize myself for 4 minutes to give an opening statement, and welcome back, Chair Powell. Since you last appeared before the committee in June of 2023,
Order,
the
Phil.
conversation in Washington surrounding inflation has shifted significantly. To be clear, it's not because the inflationary fire has been extinguished. From the most recent data available, food costs are up 21% since President Biden took office. Energy costs are up nearly 32%. Shelter costs are up more than 19%. And you'll pay 37% more for a dozen eggs in America today. As you stated in January, people are still paying more for the basics of life, and the prices they're paying are still high.
Amen.
Families aren't happy about it,
Yep.
as you know, and as our colleagues know. But according to the Biden administration, many of my Democrat colleagues, they should be thrilled. In an attempt to score political points, many in Washington have decided the best strategy is to tell people what they're feeling
Order
isn't
filled.
actually accurate. They claim Bidenomics has brought down costs, and their partisan so-called American Rescue Plan put our economy back on the right track. Of course, we know the opposite is true, since inflation skyrocketed soon after the American Rescue Plan was enacted.
Yeah.
Which was predicted by several former Obama administration economic officials. Instead of working to solve the underlying issues causing high prices, the administration has played the blame game, citing corporate greed and so-called shrinkflation.
Say how it is.
Some Democrats have even trained fire on you, Chair Powell, blaming interest rate hikes, which were necessitated by Democrat spending, for the high cost and brazenly calling you to make cuts prematurely.
Mm-hmm.
It's highly inappropriate for lawmakers to attempt to influence monetary policy. Chairman Powell, I have faith that you will not allow politics to cloud your judgment in the fight to tackle inflation. As I have always said, you are a steady hand, and I believe you are committed to the Federal Reserve's independence, as am I. Just as you have
Order
rejected
filled.
the outside pressures of politically motivated agendas, I hope you will be just as attuned to the threats of politicization
Order filled.
when the calling is coming from inside the House. Vice Chairman Michael Barr's so-called holistic review of capital requirements and the fatally flawed Basel III endgame proposal represent a concerning trend of partisan proposals taking priority over supervision. This has real-world impacts, as we saw 1 year ago this month when the supervision and regulation arm of the Fed was late catching up to the effects of the acceleration of interest rates on the banking system. Americans were understandably shaken by last year's banking turbulence. As we continue to monitor potential instability, including bank exposure to commercial real estate, it's critical that the Fed keep its eye on the ball. This does not include enacting new, far-reaching, and ultimately harmful regulatory policy, though. As you know, members on both sides of the aisle, on this committee and in Congress, have made clear that the Basel III endgame proposal would be catastrophic for families, communities, and small businesses. Regulators should withdraw it and start over. I think that's the proper course with something as deeply flawed as the current proposal. Additionally, given that other significant proposals would have to fit holistically together, regulators cannot simply proceed with them as separate modules or using a cut and paste approach. Most importantly, as the Basel III endgame proposal is discarded or altered, I strongly urge you and other regulators not to finalize your the long-term debt proposal. Instead, Chairman Powell, I would encourage you to stick to the task at hand and follow the data. The stakes are way too high to put politics over sound policy. With that, I yield back, and I'll now recognize the ranking member.
Who is buying this bullshit right now?
Thank you very much, Mr. Chairman.
If you're a bull, I hope you fucking die.
Good morning, everyone. Welcome back,
Fucking
Chair
die,
Powell.
bro.
While I
What
am
the fuck are you
pleased
doing
by
buying
the
this
progress
bullshit?
the Fed and the Biden administration have made to tackle inflation. We're not out of the woods yet. In fact, even though my Republican colleagues refuse to acknowledge this fact, housing is still the #1 driver of inflation. Based on the latest data, housing costs continue to make up nearly 70% of overall price increases, outpacing modest wage gains. This means that until we address the underlying housing supply shortage, Americans will continue to pay an increasing share of their income on housing. The affordability crisis will worsen and inflation will remain too high. With that said, it's hard to understand why Republicans feign concern about the economy when they're unwilling to address the key driver of inflation, housing. In fact, Republicans have only put forward legislation that makes things worse for millions of Americans, including moving legislation to slash funding for federal housing programs, including in rural America, where homelessness is rising. This abysmal record on housing is par for the course for Republicans. Since they have been in the majority,
Yeah, so I'm
they
trading
have
this on stream right
convened
now.
only
And
6
I'm just like
hearings on
listening to
housing.
this.
On top of launching
this bitch
baseless
talk,
impeachment
and I'm
efforts,
looking at the price right now. I'm
censoring
like, who
members,
the
and
fuck
pushing our
is
government
buying
to
this
the brink
bullshit,
of multiple
bro?
government shutdowns, it's clear that Republicans are too focused on drama
Order
and
filled.
chaos to deliver anything for the American people. That's not how Democrats roll. When I was chair of the committee during the 116th and 117th Congress, not only did we hold 55 hearings on housing, but I and my fellow Democrats enacted 12 critical housing bills into law in the last Congress alone that helped stymie a tsunami of evictions, foreclosures, and homelessness, keeping millions of people stably housed during and after the pandemic. Unlike Republicans, we don't just talk about the issue. Democrats make law. As
Shut
House
the
Republicans
fuck
continue
up,
to
bro.
disappoint, committee Democrats are offering evidence-based solutions
Oh
to keep a fair and
no.
affordable housing agenda.
Maxine
the
Waters
top
is
priority
speaking.
in
No,
Congress. That's why I and my Democratic colleagues
Order
reintroduced
filled.
Goodbye to the account.
groundbreaking
Goodbye to
bills
all of our
to
money.
address
This
the
bitch is
housing
talking
crisis
right now, dude.
and
Goodbye.
bring down inflation once and
We
for
are
all.
done. We are cooked, bro. This
This
bitch is speaking.
includes
We're
Housing
cooked.
Crisis Response Act, the Ending Homelessness Act, and
We
the
are
Down
cooked.
Payment Toward Equity Act. Together, these bills would create nearly 1.4 million affordable, accessible, and resilient homes, reduce housing costs in homelessness, and revive the American dream of home ownership for all. So, when my Republican colleagues are ready to get serious,
Make it louder?
about our
Yes,
nation's
but there's a
economy
delay, Johnny. There's a
and
delay, so I don't know if you want to be
Democrats are
watching
ready
it with
to
the
work
delay,
with
but yeah, I'll
you
make it louder.
to pass the bills into law. In fact, tomorrow at noon, I, committee Democrats, and more than 30 housing advocates will join together at a press conference to share just how important ending the affordable housing crisis is to the state of our union. And so I invite all of my Republican colleagues who say they care about this issue to come on and join us.
Yeah, I'm watching
I look
here.
forward to discussing this critical
Financial
issue
services.
with Chair Powell today. And
That's the
Mr.
link
Chairman,
from
I yield
Financial
back
Juice.
my time.
Chair recognizes Mr. Barr, Chairman of the Subcommittee on Financial Institutions and Monetary Policy, for 1 minute.
Welcome, Chairman Powell. Runaway inflation and increased interest rates still have Americans reeling. And while the rate of price increases have come down thanks to monetary tightening, the overall level of prices remain high. The toothpaste is out of the tube, and Americans, the average American family, still is paying about $15,000 more for
Yeah,
the
me
same
either,
goods
bro.
and services that they were purchasing just 3 years ago before the Biden administration. So Americans have suffered years of eroding purchasing power in their paychecks. And while I'm pleased the Fed is resolved in getting inflation back under control, I'm not pleased by the numerous recent unjustified politicized and underanalyzed regulatory proposals. The Fed needs to withdraw and
buying
repropose
this?
the irredeemably flawed
Who
Basel III
in their
Endgame
right
proposal,
mind
especially given that
is
97%
buying
of
this
public comments
bullshit?
across the ideological spectrum expressed disapproval of the proposal. Chair Powell, I urge you to listen to the American people, withdraw the Basel III Endgame proposal, and tell us today what the Fed's plans are moving forward. I yield.
The chair now recognizes the ranking member of the Subcommittee on Financial Institutions and Monetary Policy, Mr. Foster, for 1 minute.
Thank you, Chair Powell, for being here today. And I had a chance to actually read the monetary policy report
Stop,
cover
Phil.
to cover, thanks to an exceptionally long airport delay. Again, going back home last weekend. And the feeling I got again and again is that things are fairly well recovered from COVID and getting back to normal. That we're in the range where ordinary monetary policy and fiscal policy will allow us to satisfy your dual mandate. Today, unemployment remains near historic lows. Core PCE inflation is down at 2.8% year over year compared to a peak of 5.6% in 2022. And the major stock indices are hovering around record highs. GDP growth continues to beat expectations, and the U.S. economy has added more than 14 million jobs since President Biden took office. The GDP itself is pretty much back on the trajectory that it would have been pre-COVID. U.S. manufacturers alone have added nearly 800,000 jobs, employing more workers now than any point since 2008. And so my lesson from that is that the fiscal response that we engaged in was appropriately tailored, and the soft landing is within sight. So thank you. I yield back.
Gentleman yields back. Today, we welcome the testimony of Jerome Powell, Chair of the Federal Reserve's Board of Governors. As you know, you'll be recognized for 5 minutes for a summary of an oral presentation of your testimony. Without objection, your written testimony will be made a part of the record. Chair Powell, we're now recognized for 5 minutes.
Chairman McHenry, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made considerable progress toward these objectives over the past year. While inflation remains above the FOMC's objective of 2%, it has eased substantially, and the slowing in inflation has occurred without a significant increase in unemployment. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals have been moving into better balance. Even so, the committee remains highly attentive to inflation risks and is acutely aware that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. The FOMC is strongly committed to returning inflation to its 2% objective. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. Economic activity expanded at a strong pace over the past year. For 2023 as a whole, gross domestic product increased 3.1%, bolstered by solid consumer demand and improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains relatively tight, but supply and demand conditions have continued to come into better balance. Since the middle of last year, payroll job gains have averaged 239,000 jobs per month, and the unemployment rate has remained near historical lows at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers, particularly among individuals aged 25 to 54, and a continued strong pace of immigration. Job vacancies have declined and nominal wage growth has been easing. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. The strong labor market over the past 2 years has also helped to narrow long-standing disparities in employment and earnings across demographic groups.
Who actually believes this shit?
Inflation has eased notably over the past year, but remains above the FOMC's longer-run goal of 2%. Total personal consumption expenditures prices rose 2.4% over the 12 months ending in January. Excluding the volatile food and energy categories, core PCE prices rose 2.8%, a notable slowing from 2022 that was widespread across both goods and services prices. Long-term inflation expectations appear to have remained well anchored, as reflected by a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. After significantly tightening the stance of monetary policy since early 2022, the FOMC has maintained the target range for the federal funds rate at 5.25% to 5.5% since its meeting last July. We've also continued to shrink our balance sheet at a brisk pace and in a predictable manner. A restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. We believe that our policy rate is likely at its peak for this tightening cycle. If the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economic outlook is uncertain, and ongoing progress toward our 2% objective for inflation is not assured. Reducing policy restraint too soon or too much could result in a reversal of progress we've seen in inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the policy rate, we will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-run inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you.
Thank you, Chairman Powell. And I should have noted this at the outset, but this is your 25th testimony before the U.S. Congress as Chair of the Federal Reserve, and we thank you for your service and your commitment to congressional oversight. Very much appreciated. I'll now recognize myself for 5 minutes for the purposes of questions.
Order filled.
Let's begin with
I'm going to try something. Give me a second.
what's top of mind. We have two issues that are top of mind with the Fed: regulatory policy, with the Barr proposal, the Michael Barr proposal on capital, and interest rates. We're in a political year, and the lens of a political year falls heavily on all government, all parts of government. There's a lot of debate about the past 3 years of high inflation and the impact on American families. And now that inflation is receding, there's been a great deal of speculation about when the Fed would cut rates. Some say that it's going to be a lot of rate cutting this year. Some say none. What say you?
I say that really it will depend on the path of the economy. Our focus is on maximum employment and price stability, and and the incoming data as they affect the outlook, and those are the things we'll be looking at. I can go further if you'd like.
So at what point will the Fed be forced to cut rates? What does the data, what kind of data would you point to, and do you have any updates there?
What we've said is that the committee would like to see more data that confirm and make us more confident that inflation is moving sustainably down to 2%. We have some confidence of that. Inflation, headline inflation has moved down more than 3 full percentage points now to 2.4%, as I mentioned in my remarks. We want to see a little bit more data so that we can become confident and so that we can take that step of beginning to reduce policy rates. It's a very important step. We think because of the strength in the economy and the strength in the labor market and the progress we've made, we can approach that step carefully and thoughtfully and with greater confidence. And when we reach that confidence, the expectation is we will do so sometime this year. We can then begin dialing back the restriction on our policy.
Well, let's pivot to regulatory policy. Chair Powell, as you know, there have been serious concerns expressed on both sides of the aisle and across America and across industries about the Basel III endgame proposal that Vice Chair Michael Barr has proposed and that the Fed is taking up. The concern is on both process, meaning how the proposed rule was developed, analyzed, and released for comment, the general concern of a lack of economic justification for these actions, but also on the substance. The proposal goes much further than the Basel III committee recommended on capital requirements, putting us at a great disadvantage internationally, potentially. So my first question is on substance. Is the Fed listening to these comments that have been nearly unanimous in opposition to this rule? Is the Fed listening to these comments on the impact the rule will have on everyday Americans? And what is the status on rulemaking, and what is the plan moving forward?
So you're right, we've received voluminous and very substantive comments, as well as the quantitative impact study that we put out. We got those responses in mid-January, and we're carefully analyzing them. We had asked for very specific, detailed, data-based comments, and I'm happy to say that we did get that. So we're just now reaching the stage where we can begin to make decisions about how to proceed. We really haven't made any decisions yet, but I think I can say a few things. First, we do hear the concerns, and I do expect that there will be broad and material changes to the proposal. I'll add that I'm confident that the final product will be one that does have broad support both at the Fed and in the broader world.
Order
as far as
filled.
process is concerned, we're really not at the stage of making decisions about that. That's down the road at least a bit. I will say the question we get is reproposal, and I will say that we haven't made that decision, but if when we get to that point that turns out to be the appropriate thing, we won't hesitate to do it.
You won't rule that out. You would not rule that out at this stage of the game, reproposal?
Not at all. No, I think it's a very plausible option. It will depend on how things lie at the time when we reach that point.
Okay. And there's a lot of concern about the interplay between different parts of the rule. And if you change one, what does economic analysis look like for the new proposal? So it is good to hear that you'll be methodical and the Fed will do its traditional role of building consensus around the substantive changes. And that is your intention.
That is right. I said this would be a thoughtful, deliberative
Thank you, Johnny.
process. It's more important that we get this right than that we do it fast. We understand that. This is an important rulemaking, and it's going to have potential implications for the economy and the people we serve. We're going to take our time and do it right.
Thank you, Chairman Powell. The ranking member, Ms. Waters, is recognized for 5 minutes.
Thank you very much, Mr. Chairman. Chair Powell, I want to talk to you about housing, but before I get there, let me address the issue of mergers. Last week, I led a letter along with 15 committee Democrats to you as well as DOJ, OCC, and FDIC, expressing my strong concern about the lack of progress you have made in updating your bank merger review procedures. This is critical now that we just learned of another mega merger involving Capital One and Discover, which would create the 6th largest U.S. commercial bank with a major role in the credit card market. For far too long, experts have raised alarm that there is a rubber stamping process of bank mergers where virtually all applications are approved. All the while, unbridled market consolidation poses great risk to consumers and entrepreneurs. What is the status of your updates to the merger review process? And does the Fed plan to convene public hearings on the Capital One and Discover merger?
So I believe we're in regular contact with the Justice Department on what's going on with their review of merger practices. We're looking at that and considering. I think on the potential merger with that you mentioned, we haven't received an application, so there's really not much to say yet. It's early days. When we do get that application, though, we're going to evaluate that merger as always under the factors laid out under the law, and that's our commitment.
So you do believe that your bank merger procedures are ready to do the work that's necessary when you evaluate this possible merger?
I do.
And are you supportive of organizing community hearings on this merger?
We haven't even, I haven't talked about that with anybody. I will say this, we've done that in many large mergers, but that's not a conversation we've had yet. We literally don't even have an application for the merger yet.
Thank you. We'll stay in touch with you on that. So turning to the national affordable housing and homelessness crisis, where we've seen steady increases year after year in home prices and rent costs, which are a symptom of the chronic undersupply of affordable housing. Indeed, more renters and homeowners are now spending more of their income than ever on housing costs. And as you know, housing costs continue to be a primary driver of inflation. Do you think the Fed has sufficiently emphasized the role that housing costs play in keeping us from your 2% inflation goal? Do you think it's reasonable to believe that monetary policy can accomplish this goal without a fiscal policy response? And if you do, how long will it take to get there?
Housing services inflation is one of the three components that we look at that make up the core PCE and, index, and it has been coming down from its heights of a couple years back. It's part of the story. I think the overall story is that goods price inflation has turned negative. Goods prices are actually coming down a bit. Housing services inflation, you can see from currently entered into leases that as leases turn over, the increases are going to be smaller. So
Johnny, I'm going to put on my scalping hat.
And everyone's forecast, housing
I'm going to
services
scalp the
inflation
shit out
comes
of
down.
this.
It's
And
been
that leaves
reported that the
non-housing services.
methodology used to assess housing costs as an indicator of inflation is imperfect. Namely, because it considers costs based on both new and old rents, including for owner-occupied housing on a month-to-month basis. This results in stale data since families' housing costs typically do not change unless they move or their lease is up for renewal. So to address these imperfections in the housing cost indicators, the Bureau of Labor Statistics and Cleveland Fed created an improved methodology based solely on new lease rents, which is referred to as new tenant
Order filled.
repeat rent index. Has the Fed incorporated this new indicator into
Order
its
filled.
economic
Doesn't
assessments? If not, why not? And so,
Hotkey
what
doesn't
changes
work.
has it had on the level of housing inflation observed by the Fed?
So we're well aware of that, and we do incorporate it into our thinking. As I was starting to mention, that is the reason, the fact that market rents are moving up at a much slower pace is the reason why forecasts are for housing services inflation to come down, and that absolutely plays a role in our thinking.
Thank you, and I yield back.
Gentlelady yields back. The Vice Chair, Mr. Barr, I'm sorry.
Wrong Vice Chair.
Wrong Vice Chair. The gentleman from Arkansas, the Vice Chair of the full committee, Mr. Hill is recognized for 5 minutes.
Thank you, Chairman. I want to welcome you, Chairman Powell, to the committee. We're glad to have you back and your expertise. And I want to pick up where Chairman McHenry left off on his conversation about Basel III Endgame. You made a good point saying you're not taking the whole concept of reproposal off the table as you review the analytics, and you all discuss the interactivity of that rule with other rules. So if you were to repropose the Basel III Endgame, would the Federal Reserve delay then the long-term debt proposal that's on the table? In other words, would you agree that the agency should not finalize this long-term debt proposal for bank holding companies until banks have a better understanding of what their capital obligations under Basel III Endgame might be?
So we haven't made the first decision yet, so it's hard, I couldn't say definitively.
Stop,
But yeah, that's a
Phil.
question we'd be asking ourselves is what would be the implication for other rules, including the long-term debt?
Well, and is the Fed considering changes to the requirement for regional banks to issue long-term debt? Right now, it's stated to be issued at 6% of risk-weighted assets in abundance of caution in case there
Order
needs to be
filled.
a resolution, obviously. We know the logic for it. But as I understand it, it's being required at both the holding company level and down at the bank level, and that seems redundant to me. Are you aware of that, and have you considered changing that in your discussions?
Yeah, so that's another area where the comment period ended a little while back, and so once again, we're in the process of evaluating the comments. There will be a thoughtful, deliberative process around that. we welcome comments on these kinds of things. They're very important implications for the banks that are affected. We want to understand the effects, make sure we understand them correctly so that we can evaluate, what a final rule should look like.
Good. Let me turn to the monetary policy outlook.
Wait a
As the
minute.
chairman noted, consumer prices are 17% higher for American households since President Biden was inaugurated back in January of 21. And yet, in spite of that 17% increase in cost, real wages have actually fallen 2% over that period. So there's no doubt that inflation is the biggest issue facing American households. And in my view, there's three principal causing. Certainly, we had supply disruptions, but we've had unprecedented fiscal policy laxity. You described it in a recent interview as unsustainable. But we also think that the Federal Reserve, in my view, and many people on this committee commented, should have reduced accommodation after the pandemic sooner. One of the things coincident with that, which is what I want to talk to you about, is that the FOMC announced in August of 2020 this flexible average inflation targeting framework right in the middle of the pandemic, which many of us didn't understand why the Fed would take that decision then, but it would give you flexibility on the 2%, saying the Fed could allow inflation to rise above 2% and stay there above that level for some time because the Fed had had such challenges in getting the price level to 2%. That was a major shift in the Fed's approach. Do you think, in retrospect of now what we've witnessed over the past 4 years, that that was a mistake in hindsight to change that framework, and is it under review?
So we said we would do a review on a 5-year basis, and that means we'll be starting that review toward the end of this year. So we really haven't started. I do think that the question you raised will be one of the questions we look at, but the bigger question really is that change in the approach was really based on the fact that we'd had very low interest rates and very low inflation for a long period of time, and policy was always very close to the effective lower bound, so there wasn't any firepower for central banks, and so it was a way to keep inflation expectations anchored at 2% and not have them slide down. Now we have entered a different period. The pandemic really may have changed that in a sustained way. We don't know that yet, but that's the big question we'll be asking ourselves is the effective lower bound to be thought of in a different way now? And if it were, that would have ramifications for our framework. But we haven't begun the review yet. It'll begin at the end of this year and probably end late the next year.
Thank you. Yield back, Mr. Chairman.
Gentleman yields back. We'll now go to the gentleman from New York, Mr. Meeks, for 5 minutes.
Thank you, Mr. Chairman. Thank you, Chairman Powell, for being here. And I think I want to pick up a little bit right where we are. 2019, 2020, the entire world was under the unprecedented pandemic with COVID rate. Is that correct?
Yes.
At the time. And that changed a lot of things with reference because not just for the United States, but for the entire world. And it affected the economies of countries just about on the planet. That's not also correct?
Yes.
And supply chains was disrupted. In fact, I can remember many Americans and people around the world could not get toilet paper or paper towels and some of the basics. And so the prices, because of the, of supply and demand, skyrocketed, causing the inflation, not only in the United States, but basically all over the world. Is that correct?
Yes.
Nobody that is watching this was before was born in 2020. We all know, dude.
At that particular time, we couldn't just go back and act like the pandemic wasn't there. We had to do something to try to make sure that we were able to get through the pandemic. Is that not correct?
No shit.
Yes.
And now we're at that point where we're about to get through this pandemic. And we can look at the rest of the world, what they did or didn't do at that time, but what we did at that time. And as a result of that, 3 years post the pandemic, when you look around the world, I think that you were correct with what you stated, that by most accounts, our economy is doing well. In fact, I would say our economy is doing better than most of the other countries in the world. Would you say that's correct?
I would.
And so, I would say then that some of the other countries of the world maybe should have looked at the policies that we put in place thereafter so that they could get out of it, so that they could have a labor market that is strong, where the unemployment rate is near a 50-year low. And as you've stated, inflation is also now coming down faster than any place else on the planet, just about. Is that not correct?
I think that's right, yeah.
And I think that you also recognize a mismatch between the strength of the economy, that's what we're talking about, in the field. And I think that Ranking Member Waters touched on one of those big issues of housing, of which is now, we're still trying to get that under control. And
Order
I think
filled.
the Ranking Member has some ideas on how we can do that, and that may be something that you need to consider so that we can further get down the inflation rate. And the other would be the commodity markets, because the cost of food is too high in people. So that's something else that we need to get in control. Is that not correct?
Yes.
And let me just ask this. Can you say that there's a connection, for example, between conflicts in other areas of the world, like Russia's war against Ukraine and or the turmoil in the Middle East and the economic pressures that the United States feels? Does that not also go into the reason why the cost of commodities can be still higher? Is there a connection therein, Mr. Chairman?
Certainly the war in Ukraine caused commodity prices to move up sharply.
So could you tell you what is the, what would the connection lead you to believe that there is an urgent need for us, I would think, for, when we're running out of time, for us to do everything that is in our power in Congress to support Ukraine, so that we can make sure that and other strategic partners, that we can help the commodities market, and that would help lower the cost of some of the commodities, bringing food prices down, if we would just be able to pass certain things that's going to help Ukraine right here in the United States Congress. Is that correct?
Here's where it gets outside of our jurisdiction. So I wouldn't have an opinion on Ukraine funding.
But if we had more grain that was going through, it wasn't blocked by Russia, things of that
Shut
nature.
The fuck
that
up.
Generally, just says that helps bring the cost down. Cost is higher because of the disruption in the Black Sea that's happened because of this war. So that would help bring the cost down. That has not necessarily the policies just here in the United States, but that's the policy because of what's going on in Russia, and we need to make sure that we do something to prevent that if we really are serious about bringing inflation down. Is that not correct?
I think it's correct that a full supply of grain would help with commodity prices.
And so, instead of us playing politics with this and acting like it is your fault or anyone else's fault that we had to go and do what we did because of the unprecedented pandemic, what we did was save the economy then, knowing we got some problems that we had now, and now we are recovering quicker and better than any other country on this planet as a result of your policies and the policies of Joe Biden.
The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Mr. Chairman. And Chairman Powell, thank you for testifying today. When you were before this committee a year ago, I cautioned against raising capital requirements on commodity derivatives that our agricultural and energy producers use back home to keep prices of food and power stable for consumers. At the time, you said that was a very specific concern and you weren't sure the proposal would even address commodity derivatives. And in fairness, that was before the Boswell proposal was officially published. Unfortunately, we now know that the proposal does impact commodity derivatives, and in fact, they are among the most penalized financial products that banks offer. And I would note for just a moment, I very much appreciate your comments and responses to Chairman McHenry about the nature of the overall proposal. Congress wanted end users to be able to secure their hedges without posting margin to keep the derivatives markets affordable. But I've seen estimates that some of these types of transactions for end users could face 10 times the capital requirement. Chairman Powell, make me feel a little better. Ease my concerns here. Will you and the Fed work to fix this?
Let me start by saying I want to echo the fact that our commodity markets and our capital markets are a huge national asset, and we need them to be functioning well and with as little friction as possible. I now understand that what you were referring to is the things that were done to increase capital requirements for various kinds of derivative activities. And I'll just say that's an area we're aware of the concerns, and it's an area that we're taking a very close look at.
I appreciate that. I was a member of the Dodd-Frank Conference Committee, where there was bipartisan support to not disadvantage end users, farmers, ranchers, small businesses. This had broad bipartisan support then and still does today. Unfortunately, the Fed could undermine this longstanding work done by Congress. I'd like to enter a few letters into the record, Mr. Chairman, that discuss the detrimental impact to end users. First, a joint Agricultural Trade Association letter from the American Farm Bureau Federation, the National Cattlemen's Beef Association, among 7 others. Next, a joint Energy Trade Association letter from the American Gas Association and 4 others. And lastly, a letter from the American Public Power Association and the National Rural Electric Cooperative Association.
Without objection.
Thank you, Mr. Chairman. Chairman Powell, I'd now like to focus on how the proposal is set to significantly disincentivize banks from offering clearing services. In Dodd-Frank, Congress mandated central clearing as a way to reduce risk in the system. The number of banks that can clear derivatives for end users has reduced over time, making it harder for end users to find a bank to offer this service.
That's cool.
There are some estimates that the Fed's proposal will increase capital for this activity by 80%. I'm worried that this will make it even harder for end users to find a bank to clear their hedges. This also comes at a time when the SEC, our friends at the Securities and Exchange Commission, has just finalized a rule in December that will increase clearing in cost in Treasury markets. This will have a real impact on market access and liquidity, not just in commodities, but the $26 trillion Treasury market that plays a critical role in the world economy. Will you work with the CFTC to address this problem?
Again, I'll say that we're aware of those concerns, and we're prepared to work with other agencies and also to make sure that our capital proposal appropriately addresses them.
I'm going to respect the range.
The strength of central clearing is entirely dependent on banks' willingness to participate, and problems with the Boswell endgame warrant a full reproposal to give us time to appreciate their consequences, and there are real consequences, as you and I both know, Mr. Chairman. And with that, Mr. Chairman, I yield back the balance of my time.
Gentleman yields back. The gentleman from Texas, Mr. Green, is recognized for 5 minutes.
Thank you, Mr. Chairman, and welcome again, Mr. Powell.
Nice
an honor to have you before us today. I always enjoy hearing your commentary.
Short top of the range, but I don't think it's going to
As you know, recession and inflation, these are buzzwords, and they are used in some circumstances to cast a dim light on perhaps the Fed and others who are working to end some of these troubling circumstances we're dealing with. Are you now at a point where you believe that there will not be a recession? There was much talk about recession, and many people worried that we would find ourselves having to negotiate our way out of a recession. What is your position currently on a recession?
So U.S. growth last year was in excess of 3%. What we're seeing so far this year is continued solid growth. My expectation, and that of other forecasters and of my colleagues, is that we'll see continued growth at a solid pace. I will say, so there's no evidence or no reason to think that the U.S. economy is in or some kind of short-term risk of falling into recession.
I knew it
Having
was.
said that, though, there's always a possibility, a meaningful possibility that an economy will fall into recession. I don't think that possibility, though, is elevated at the current time.
Thank you. I appreciate your saying this because we want to, at some point, eliminate the great deal of fear associated with just the term recession. Next point, the December FOMC projections showcase a slightly lower unemployment rate than last June's projections, and slightly
Order
higher
filled.
GDP, suggesting a soft landing remains likely. Are you of the opinion that we're headed to a soft landing, Mr. Powell?
I'll just say that what we've seen so far is an economy that's growing at a solid pace. We're seeing a labor market that is still tight, still strong. Wages are moving up.
Stop filled.
The labor market's coming into better balance between supply and
Order
demand.
filled.
And inflation has come down sharply, really, since the middle of last year. So those are the conditions we see. They're very attractive conditions, and we're trying to use our policies to keep that growth going and to keep that labor market strong while also achieving further progress on inflation. That's our goal. And do I think there's a possibility we can achieve all of that while keeping the labor market strong and the economy growing? Yes, I think there is a possibility. Indeed, that is what we're trying to achieve.
A soft landing can be difficult to identify.
Order filled.
We could possibly have a soft landing and miss the point at which the landing took place. How do you define the soft landing such that a member of the public, a layperson, would understand that we have indeed had a soft landing?
So we really think about it in the terms I just discussed, which is we want to keep the economy growing, we want the labor market to remain strong. 3.7% unemployment is pretty near 50-year historical lows. And we want inflation to continue to move down closer and closer to that 2% objective. And we've made quite good progress on that over just the past year. So we want to continue those conditions. And I don't want to put the label on it. Other people can do that. But I would just say we're using our tools to keep a strong labor market and strong growth while making further progress on getting inflation down to 2% for the benefit of the public. That's the economy that we're trying to achieve, and I think there's we're on a good path so far to be able to get there.
Well, I concur, but I would ask this as my last question. Will there be some announcement at some point that we've had a soft landing? Because we have people who are continually indicating that we're not having a soft landing, there's a possibility of a recession. So will there ever be some official statement that would give people some comfort?
I don't think by us, no. I think we're just going to keep our heads down and do our jobs and try to deliver what the public is expecting from us. We wouldn't be declaring victory like that, but
The gentleman's time has expired.
Thank you, Mr. Chair.
thank you.
The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Mr. Chairman, thank you very much. Chairman, welcome back. I think we enjoy this. I hope you do too. I know there's some bit of trepidation about all the things that are available to us and you to answer. I learned a long time ago on a campaign trail, every problem can be solved on a campaign. Reality's a little bit different. Welcome back despite all that. Looking at the Monetary Policy Report, March 1st, 2024. And as I review this, I would like to focus on the term that I would say, high prices are here to stay. Because what I've heard you say today in this report really go to is, you got everything under control, but we're going to keep the high prices. And I think the high prices really take a toll on the American people, as you're hearing from our colleagues, no matter whether they be Republican or Democrat. Page 7 of your report, you don't have to go focus on it, says, while current services, core service price inflation has been slowing, but remains elevated. It does. Labor costs, as you know, and energy costs are a driver to your monetary policy. The question that I have is, because you began referencing policy, 2 weeks ago or so, the president announced that he was going to slow down the gifting of opportunities in Texas for natural gas to be able to continue the exploration. And this in Texas is $1 trillion answer problem to us, because if we do not constantly go find through these new fines, but also through the permitting process, we're in trouble. But we're also putting in trouble our contracts that we have with Germany and a lot of other countries. This is going to mean also that business in America continues to have high prices because, as you know, wages are already high and now energy is high. There's no resiliency to continue this and see the American people win. You talked about policy, so what's your advice to policy about energy and what this administration is doing on a policy perspective?
We have, broad, significant, important responsibilities, but we're really not responsible for energy policy, and we try to avoid commenting on.
But it
things that
has
we're
a
not
huge
responsible for.
impact on this report. It arbitrarily keeps prices high. It arbitrarily means that business is not, while they're making money, and while households, people do buy that, it's diminishing their long-term advantages to make progress. So you're just going to leave that alone?
Really not appropriate for us to comment. On if I'm commenting on energy policy, I should comment on everything.
Well,
we have a mandate which is maximum employment and price stability. We take decisions by the legislature and by the administration as a given. We're not in charge of second guessing them. It's just not our job.
Okay, well, all right, let's say we're not going to second guess them. I will. I believe that the energy policies that this president and the Democratic Party have supported are causing a huge boom in prices staying high. They will not come down. A boom in attacking the energy industry, jobs that are associated with it, foreign policy.
Take that shit out, guys.
Relates
Come on.
to contracts that we have signed
Stop
with
playing.
foreign countries, giving up the natural gas market almost entirely on a world market to Qatar. It has a huge impact on whether we are going to keep prices high or control these prices. It has a huge impact on, I think, your monetary report about how many houses get built, how many jobs get filled, whether we have jobs in place, whether we continue to have more jobs available than workers that are there, because over-regulation is having a lot to do with the nervousness, not only on this panel, but also by the American people. It would be my hope that you would pass some sort of a memo and tell them you have no opinion, but you want them to see what the impact is. I want to thank you for being here. Thank you, Mr. Chairman.
I'm up 400 right
Somebody
now.
goes back. The gentleman from Connecticut, Mr. Heim, is recognized for 5 minutes.
Thank you, Mr. Chairman, and Chairman Powell, thanks for being with us today. I have a question, but I want to start by acknowledging, not celebrating, but acknowledging what has been a really remarkable soft landing in our economy. And I'm not celebrating because the American people, consumers, are still feeling the effects of high prices. Wages haven't caught up with prices in some instances. But I think that it would be fair to say that observers would never have predicted the conduct of this economy. You yourself said it in the final press conference of 2023 when you said a very high proportion of forecasters predicted very weak growth or a recession. Not only did that not happen, we actually had a very strong year. So I want to acknowledge that and acknowledge your commitment to independent monetary policy. And because I'm still burdened with this idea that truth and facts matter, I want to point out, especially having listened to my good friend Mr. Sessions talk about the energy market, truth and facts matter. We are producing more oil and natural gas today than any other country on the planet. We are the world's #1 energy producer.
No, this guy is so bullish,
my entire
bro. Come
5
on, let's
minutes
do it.
sort of pointing out facts.
He is so
the
bullish
fact I
right
want to
now.
point out here, and this comes right out of the report, is that the premise that inflation is Joe Biden's fault, is fiscal policy's fault, first is faulty because half the fiscal stimulus that occurred in the face of the pandemic happened under the previous president, Donald Trump, and it has faded, and this report makes the case. Core, and I quote from it, core goods prices have been declining as supply bottlenecks ease and import price inflation falls. So, Mr. Chairman, I don't want you to comment on that because it gets a little bit political, but I do think it's important that we keep some foot on the plane of facts. I do want to ask you a question, though, Mr. Chairman, because I always worry about risks that we see and risks that we don't see. And I want to use the remainder of my time.
There's 4 people watching.
To talk about
Guys,
a risk
I
you're
don't condone
very
what I'm
conscious
doing right
of,
now.
which
It's a
is
little bit of
the overhang in the
degeneracy, so
commercial
please
real
don't do what
estate
I'm doing.
market. As you know, the Financial Stability Oversight Council identified
disclaimer in my
commercial real estate as
bio.
perhaps the most salient risk to the financial system, $6 trillion roughly in loans, half of that on bank balance sheets.
Do not trade like this usually. Let's
In a
fucking
60
go,
Minutes
baby.
interview
Come
a
on.
few weeks ago, you characterized distress in the commercial real estate market as sizable but manageable. Do you still feel like that risk is manageable? Do you feel like you've got the visibility and the transparency and the tools to address it? It makes me nervous because this has echoes of 2008, 2009, when vacancy rates were declined relatively rapidly. We're not seeing that right now. So how do you feel? Does that risk continue to be manageable, and do you have the tools to manage it?
I would say yes to that. I think it is manageable, and we've been working hard to management for some time now, really. And what it really is it's a lot of downtown real estate where there's too much office supply because of work from home, and also the kind of downtown retail that is no longer as profitable. And things like that are really at the heart of it. So what we've done is
that weekly VWAP.
We've looked at banks that have significant
Weekly
concentrations.
VWAP's at 104.
and
Come
we've
on,
been in
take
touch
out that
with them to
42
make
in
sure that
balance.
They have a plan.
Let's fucking do it. Shut
to
the fuck
deal
up,
with that.
Jerome.
There will be losses by some banks.
on.
It isn't really the big banks. It's really medium and small-sized banks that have these higher concentrations. It's going to be with us as a problem we'll be working through, I think, for several years. And the idea is you've got to have enough capital, enough liquidity,
Approaching
and a
with the
plan
VWAP, see if we break
to,
through that. If not,
take the losses that you're probably going to
position
take.
off.
And so that's what we're doing. We're very active in this space with small, medium-sized.
So let me ask you about that. Sorry to interrupt, but let me ask you about that. Silicon Valley Bank, wild irresponsibility inside the bank, egregious irresponsibility on the part of corporate treasurers who put so much on deposit. The Fed also had some self-examination to do because the examiners and the supervisors of the bank, quite frankly, were not doing what they should have been. So we might be forgiven for being a bit skeptical of claims of being on this. What has changed in the context of Silicon Valley Bank that gives you the confidence that the supervisors and the examiners will be on top of this?
Order filled.
I see it with my
take
own
that off.
eyes, but frankly, there's a risk that we would overreact to something.
I'm talking about, baby.
As
4K
significant as
trade.
that. It's not like we wouldn't have reacted.
$4,000
strongly
trade.
to what
We
happened
broke the
with
VWAP, but
with
it's okay.
Silicon
We're
Valley
up
Bank, and we have
1,300 on the
so
day.
I know that our supervisors are out there, and we're hearing back from media reports that we have been engaged with medium and small-sized banks principally on this. So I am confident that we're doing the right things there.
feel like shit
and I
for
do
closing that a
believe it's a
little too
manageable
early, but
problem. If that changes, then I'll,
We're good.
I'll,
We're good.
I'll say so.
Thank you.
We're up
Thank you, Mr. Chairman. You're
1,300
back.
on a day.
Gentleman from Missouri, Mr. Lukemeier is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Powell, for being here today.
Got
I'd like to
really big
associate my
projection
remarks, or myself, with Mr. Hill's remarks earlier with regards to FDIC proposed long-term debt requirements that are based on risk weighting of assets. I think it's an ill thought out proposal, and hopefully your position on FSOC will be able to advise them and hopefully guide them that this is going to be held up until we actually get a Basel III rule. In October 2023, the board issued a proposal to update the debit interchange fee cap and regulation II.
Quick test zone.
This is very
POC,
concerning,
Weekly VWAP.
given the data from both the GAO and Fed's own studies show that Reg II has significantly harmed access to
thank
free
you, Johnny.
checking
Thank
and
you
other
for the
banking
support, man.
services for the country's poorest citizens. Yesterday, I introduced the Secure Payments Act, which would
It's a little
prohibit
degenerate,
final rulemaking until the Fed, among other things,
got it in the
studies the
bag.
impact of the board's proposed rule, completes a quantitative impact analysis specifically as it relates to
I try
affordable
to
banking
short here,
services for
actually.
low-income Americans,
If
and
we get
reports
to-
those findings to Congress.
Back to that.
I understand the Fed
top of
acted
that
here
candle.
because you feel you are facing litigation, but I urge the board to
Honestly,
proceed with
fuck
extreme
the
caution with any type of price control proposals, especially since the first iteration was so clearly harmful. Chairman Powell, knowing of the hardship caused by this policy on low-income consumers, does it give you any pause to continue down this road?
As you know, this rule is out for comment. We extended the comment period to May 12, so we don't have all the comments yet. We'll evaluate them carefully and make an assessment. I mean, the law does assign us a specific job.
Guys, I gotta
which
go.
is to
I'm gonna
assess
pause
whether
this.
an interchange fee received by
I'm
a
gonna
large
put the link
debit
to this in the
issuer
chat if you want to watch it
processing a
on your
debit
own.
card transaction is reasonable and proportional to issuer costs. This is the obligation that Congress has
Did it
bestowed
go?
upon
Did it go
us.
through?
Not something we thought we sought, but that's our obligation under the law, and we don't know what else to do
Okay,
than to
there we
keep
go.
doing it for as
I'm
long.
gonna pause this. You want to watch it? I put the link in the bio. It's free. You can watch it there. I need to go. I have a test to take. I have a midterm to take in a bit. So, yeah. I hope you guys enjoy the stream. Be smart with this shitty price action. And yeah, I'll be seeing you guys. Probably be on stream maybe tonight. And if not tonight, then tomorrow morning. All right. See